Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing jargon of corporate filings. Today we're looking at EQV Ventures Acquisition Corp and getting a peek behind the curtain of their latest report. It looks like they're getting ready for a big move. Alright, straight into it. This report is a Form 8. Think of it as a special announcement filing with the US Securities and Exchange Commission, or SEC, for big events that happen between their regular, more detailed reports. This one is all about something called a business combination. So what is a business combination? Essentially, EQV Ventures Acquisition Corp is a special kind of company, often called a SPAC, or Special Purpose Acquisition Company. Their whole purpose is to raise money and then find another company to merge with, essentially taking that other company public. In this case, they've entered into an agreement to combine with Presidio Pubco Inc. and its related entities. This is a pretty significant step for EQV. They've also filed a registration statement, which is a big document that essentially tells investors all about this proposed merger. It is like the detailed plan for how this combination will work. It includes information about EQV, the company they're merging with, called Pubco, and other entities. This document is still pending approval from the SEC. Now, a key point of this report for the 12th of January 2026 is that EQV put out an investor presentation. This is usually where companies try to get investors excited about the deal. They're not just filing legal paperwork, they're actively trying to sell the vision of this combined company. The filing also lists the securities that are registered on exchanges like the New York Stock Exchange. We see units, which are packages of shares and warrants, Class A ordinary shares, which are the basic ownership stakes, and redeemable warrants, which give the holder the right to buy shares at a certain price. This tells us a bit about how the company is structured financially and what is available to investors. Interestingly, they've checked a box indicating that this filing is intended to cover written communications made under a specific rule. This often happens when companies are making ongoing disclosures about the deal. It is essentially a way to ensure all their public statements about the merger are properly accounted for. EQV also identifies itself as an emerging growth company. This means they qualify for certain regulatory benefits, like being able to delay adopting new accounting standards. It is a common status for younger companies or those undergoing significant transitions. Now, let's talk about what is really important in these reports. Companies always include forward-looking statements. This is basically where they talk hypothetically about what they hope or expect to happen in the future. They use words like estimate, plan, expect, and anticipate. They'll talk about future performance, the success of the business combination, and how the newly combined company will operate. But here is the catch, and this is crucial. These statements are based on a lot of assumptions, and real life is messy. Many things are outside of their control. They warn about risks like not being able to complete the business combination, regulatory hurdles, competition, and not being able to achieve their goals. They even mention the possibility of legal proceedings. It is all about managing expectations and protecting themselves legally. They're saying, this is what we aim for, but a lot could go wrong. The report directs people to where they can find more information. It mentions the SEC's website, where all these filings are public, and the company's own website. They're encouraging shareholders and interested parties to read all the documents related to this business combination carefully. It's a call for due diligence. They also talk about participants in the solicitation. This refers to the people within EQV, Pubco, and other related companies who might be involved in asking shareholders to vote for this deal. They're giving a heads up that these individuals' interests might be different from a regular shareholder's. This next part is a legal disclaimer. They're very clear that this report itself isn't an official offer to sell or buy anything. It is just information. They can't offer or sell securities anywhere it is not legally allowed. It is a way to make sure they're not accidentally breaking any laws by putting out this information. Finally, we get to the exhibits. The most important one here is Exhibit 99.1, which is the investor presentation they put out on the 12th of January 2026. This is what they used to try and get investors excited about the upcoming merger. So, what is the big picture here from a Warren Buffett style analysis? EQV is a SPAC, meaning it exists to facilitate a merger. The filing confirms the merger is happening and provides some context about the parties involved. The investor presentation, though not detailed in this particular 8K itself, is the key piece of information. The current report doesn't contain any specific balance sheets, income statements, or cash flow statements for the ongoing business operations of EQV itself, as its primary purpose is to find a target and merge. The financials we see here are more about the structure of the deal and the securities involved, not the profitability of an existing operational company. The real story is in that investor presentation. What does it say about Pubco's business? What are its growth prospects? What are the key financial projections, and how do they stack up against competitors or industry benchmarks? Without seeing that presentation, we're only getting half the story. However, the fact that they're in the business combination stage and have filed this 8K indicates they are progressing with their stated goal. The risks highlighted in the forward-looking statements are standard but important. The success of this venture hinges entirely on the business they are merging with, and the terms of that merger from a strategic perspective, EQV's direction is dictated by the success of this business combination. If it goes through and the combined company performs well, EQV has fulfilled its purpose. If it fails, it is a setback. The opportunity lies in whatever business Pubco is in. If it is a high-growth, promising sector, this merger could be a good thing for investors. The risk is that SPACs can sometimes overpay for their targets, or the underlying business might not live up to the hype presented in investor presentations. My conclusion based on this filing alone is that EQV is actively moving towards its objective of merging. The critical next step is always to examine that investor presentation. That is where the actual business, its financials, and its strategy will be laid out. Without it, this filing is mostly a procedural announcement of intent. Alright? That is our breakdown of EQV Ventures Acquisition Corp. Latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.